A growing number of economists say that's what it will take to get inflation under control, even if it means going into recession. But the odds of a supersized hike keep climbing. With us, one of the economists calling for 100 basis points, Wells Fargo's Sarah House, also with us to discuss investing as the aggressive Fed potentially gets more aggressive, Keith Fitzgerald. He's principal at the Fitzgerald Group. Sarah, I'm going to start with you. Why do you think 100 basis points is still on the table when today it seemed as if perhaps some of the economists are thinking, 75 still feels about right?
Right. So our expectation of a 100 basis point hike came out of that super hot CPI print that we saw on Wednesday. I think since then we have seen some of the economic data suggest that the U.S. economy is on potentially a slightly weaker footing. And then, of course, we also saw some Fed officials signal that 75 still is more or less okay in their book. But I think it's still on the table considering the fact that Fed officials have indicated that they want to get back to neutral and that the economy needs to get back to a restrictive stance of policy here soon. And so that 100 basis point hike would certainly move that policy rate towards neutral, potentially into restrictive territory in that expeditious fashion that Chair Powell and other Fed officials have been saying that policy needs to move to.
Sarah, this just seems like a very atypical economic situation that we're in when we have employment still fairly strong, the consumer still fairly strong, even as inflation rages. Can you have a weakened economy because of monetary policy, but still have high inflation? Meaning, even if we do a 100 basis point hike, is it possible it still doesn't work?
Well, I think we have to remember that monetary policy works with a lag. And I think that is one of the factors that Fed officials are beginning to grow cautious about, and how we think that Fed policy hiking will slow over the remainder of this year. But first, they have to get back to restrictive territory. And when we look at whether inflation will come down with a 100 basis point hike, it's going to take some time. So what the core CPI showed this week is that inflation continues to have exceptional momentum, and it is going to take some pretty aggressive moves by the Fed to bring pricing, to bring inflation down lower and bring demand back better in line with supply and get inflation under control.
So, Keith, now that Sarah has sort of laid the groundwork for us, and it does seem that we can all agree at least growth is slowing. I think to be determined what happens with inflation therein. But we had a nice rally on Wall Street today here, up about 2%. Does that suggest to you that we still have not yet put a bottom in the market? And with all of that in consideration, what's your advice for investors in such uncertain times?
Well, I think those are all very, very excellent questions. So two things strike me. Today, it was nice to see some green on the screen, no matter what your perspective is on inflation, what the hike's going to be, et cetera. It was a relief to see some green instead of this sea of red. But I do think the markets are getting ahead of themselves. It didn't feel quite right. I think that the Fed is perhaps going to hike not only 100 basis points, but we might even see an interim meeting, which means we're going to have more faster. The markets haven't priced that in yet. So here's my advice. Keep it real simple. Keep it right on the fairway. Now's not the time to be a hero. The question for investors right now is to ask themselves not where's the hot money going, but what companies are going to change the world we live in, and who's going to be here 5 years from now, 10 years from now, because those are the companies you want to play ball with right now. Let everybody else lie. Don't try to nail it.
So can you give us some example of these fairway picks that you're talking about, companies that are going to be around, help us change and innovate for the future in 5 years from now? So you're talking 5-term time horizon for some of these picks.
Yeah, I am, because the odds of success are much higher. I mean, if you're talking about tomorrow, it's 50-50. But if you're 3 to 5 years out, it's 82.5% of a higher close. 10 years out, you're talking 92, 93%. So if you look around, everybody's changing the way they buy things. They're changing the way they go to the store. But nobody's giving up on Apple. Nobody's giving up on Microsoft. Nobody's giving up some of the Pfizers or the Gileads. Those are things, Costco. Those are all names that you've just simply got to have in your portfolio. They tend to be lower beta dividend producers most of the time if you're doing your job right. And those are the companies that are going to be here. They're not likely to fail. And you can't say that about everything else. The mistake is that people are tending to lump them all in one basket. And that's simply not true.
Well, that's why you got to watch CNBC. You can't lump it all together. You got to do your homework.
Exactly.
Thank you for helping us do that. Keith Fitzgerald and Sarah House.